is cheap, fast, and there's a lot of innovation coming. And we're seeing lots of nice, easy applications for people to use. So, what drives a blockchain use? Well, nice applications, easy use, and cheapness. So it's really, really blowing out all the metrics versus other chains right now, hence why its price outperforms both Bitcoin and Ethereum. So it's been definitely the big breakout of this cycle, and I think it continues because it's getting a lot of traction. It's just a very easy to use chain that's very fast, and a lot of the applications are just very user-friendly. I think all of these big blockchains will be worth multiple trillions of dollars because these are not single applications. They're entire networks of which you can build entire other businesses upon. These are immensely valuable things, but the applications haven't yet been built on it. So, this cycle is not where these things are going. If you think of most asset prices versus this debasement, the S&P is doing about 8% a year since 2012, which basically just keeps your head above water. The NASDAQ's done about 17%, but Bitcoin's been doing 150%. And when you look at NASDAQ versus Bitcoin, the NASDAQ is down 99.97%. So it does do very good for your purchasing power, but this debasement is a real issue because most things just don't keep up with the debasement.
Raoul Pal, CEO of Real Vision and a macroeconomics expert, believes that Solana will spearhead the next phase of significant growth for digital assets. He predicts that Solana will play a crucial role in bringing the cryptocurrency market out of its current stagnation and into a new bull market phase. Paul highlights two important developments on the Solana blockchain that reinforce his bullish outlook on Solana. The first is NFT compression, which enables various use cases such as ticketing and derivative contracts at low cost, thereby improving the scalability of NFTs. The second is FireDancer, a third-party validator software that will be released next year and will improve the speed, scalability, and efficiency of Solana's transaction processing. These developments convinced Paul to allocate 90% of his cryptocurrency investments to Solana, underscoring his confidence in its potential. Digital asset investment firm 21 Shares has filed for regulatory approval to launch an exchange-traded fund ETF tied to the spot price of Solana, following a similar filing by Van Eck. Both firms plan to enlist their Solana ETFs on the Chicago Board Options Exchange, CBOE, pending regulatory approval of their rule change. Alex Thorne, head of research at Galaxy Digital, discusses the regulatory hurdles facing SEC approval of the Solana spot ETFs, filed by Van Eck and 21 Shares. These filings aim to integrate Solana into regulated financial markets, but face complications due to the SEC's view that Solana is an unregistered security. According to Raoul Pal, if you only hold Solana, it should be enough to make you a millionaire. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now let's get back to Raoul Pal's view on Solana and the overall crypto market.
When you invest in the crypto asset class, you expect volatility. If I go back over all the years I've invested, most years you get 2, 3, or even 4 30% drawdowns. This one in Bitcoin has been 27%. It's kind of within the range of normality. And what you need to ask yourself is the main drivers of crypto are the business cycle, i.e. where are we with the economy? Well, we're starting to pick up slowly. Inflation's coming down. Rates are going to come down. Liquidity is going to come in. And so therefore, that's usually a very good time for crypto. So the tailwind is behind you. And the other thing, are people adopting the technology? Are things being built on it? And that's ongoing too. Now, if the business cycle was getting old and the economy was starting to feel a bit more fragile, then yes, you might be worried about it. But this is early in the cycle, and generally, you have to expect the volatility.
He also anticipates a breakout in Bitcoin price towards a new ATH amid improving macroeconomic conditions. Paul indicates a giant cup and handles pattern that, when broken, could send Bitcoin into the banana zone, a period of significant upward price movement. Paul notes a potential healthy correction in the NASDAQ. Some investors turn to alternative assets like Bitcoin during a correction in traditional markets like the NASDAQ. This is a common strategy to diversify their assets, spread risk, and potentially offset losses in the stock market. Bitcoin is presented as a safe haven asset similar to gold. This perception may increase demand for Bitcoin and other cryptocurrencies amid market uncertainty, leading to price increases during a NASDAQ correction. The U.S. election is another catalyst that could send Bitcoin to new all-time high. Governments often introduce economic stimulus measures to stimulate the economy and improve confidence ahead of elections. This influx of capital can benefit both traditional and alternative assets. Despite this assumption, it is imperative to keep in mind that each year and election cycle can bring unique circumstances that can influence market performance differently. He also highlighted the possibility of a weaker U.S. dollar, which could further ease financial conditions. Since Bitcoin is often considered a hedge against inflation, a weaker U.S. dollar could raise concerns about rising inflation. Investors can turn to alternative stores of value like Bitcoin to protect their wealth against the potential loss of purchasing power due to inflation. Paul sees the recent stock market crash in a different way. So in a recent interview, Paul claims that the crash could be a blessing in disguise for the cryptocurrency market. Paul believes that Bitcoin could benefit as central banks, including the U.S. Federal Reserve, are likely to cut rates and end quantitative easing measures. Paul expands on the bigger picture and describes a coordinated effort between central banks to inject liquidity and stimulate growth. Many people borrow in yen because it is cheap and invest in other assets. This funding trade worked until the start of the Japanese intervention. Then people are forced to reduce risk in banks and hedge funds. This therefore triggers a massive sell-off in various assets, creating panic across the market. However, he sees this as part of a broader game aimed at injecting liquidity into the system and achieving regime change. The upcoming stimulus packages in the U.S. and all around the world will boost the digital asset sector. According to Paul, politicians tend to hand out candy in the form of stimulus packages during elections, which leads to higher inflation and thus higher digital asset prices. We see China in an economic mess. It's in debt deflation because of the same problems: aging population, high debt, everything is exploding, and they are likely to stimulate again. The Europeans will probably end up stimulating more, and ultimately the U.S. will also stimulate more because they need growth to pay for these interest costs. So our money is very likely to be worth less. Asset prices will go up, but our salaries won't, which is a big problem. So our future is getting poorer because we can't afford so many assets, and we have this massive wave of debt to refinance. It's normally a very positive context for cryptocurrencies. Lots of liquidity, and liquidity is what drives all markets. The depreciation of fiat currency through inflation is akin to paying hidden taxes, as investors are deprived of the power to buy assets due to their rising cost. Asset prices keep going up, and that's because they depreciate the currency. What is meant by currency depreciation may seem like a complicated economic term, but it essentially means that they are taking away your power to buy assets. It's averaged 15% per year since 2008, so you lose the ability to buy assets by 15% per year. So every year that you have a bunch of cash and you don't buy a house, that house goes up by about 15% per year. It's crazy if you run out of money for 2 years, or if you have no savings, it becomes more and more expensive. In fact, they tax you. But hiding it is like a socialization of all these costs.